The pressure is on and the stakes are high as President Trump stands firm on tomorrow's trade deadline for countries to make a deal with the U.S. or risk those increased tariffs. One of the most historic deals has been with the European Union, our largest trading partner, where we export more than $800 billion worth of goods and services. And joining us this morning to break it all down is the Executive Vice President of the National Taxpayers Union, Brandon Arnold. Good morning to you, sir. Great to see you.
Good morning.
You know, we averted a trade war with them, so that's already a win. But let's talk about the significance of this deal. What's the top line details and why was it so important?
Yeah, I mean, the biggest thing is to have that certainty. Right now, there's so much uncertainty in the trade space, in the economy, and that is hindering investment. We saw that in the economic data yesterday. So having some certainty with the EU, like you said, one of our biggest trade partners, absolutely enormous. There's some purchase agreements that are built into this deal where the EU is going to somehow obligate its members and companies to purchase more energy to make investments in the U.S. economy. And then we also had zeroing out of tariffs altogether, which I think is the best kind of trade deal on a few different industries, including aircraft and alcohol. So big wins for those industries as we hopefully move to a more zero-for-zero trade arrangement across the board.
Right, because just like taxes, no one likes tariffs, which are taxes, right? And I think many economists would say the ultimate goal is free trade. President Trump has said from the beginning this is about leveling the playing field and using these tariffs as a negotiating tool, the art of the deal, he calls it. So what do you think will be the impact if some of these other countries do not come to the negotiating table by tomorrow's deadline?
Yeah, the clock is ticking there, and Canada being the biggest outlier right now, one of our largest, most important trade partners, one of our most important diplomatic allies. So getting a deal resolved there, absolutely critical for our economy, for their economy even more so. And then, you know, as we move around the globe, there's plenty of other countries where we have not resolved those tariff rates. If we can't get those settled and we revert to those so-called reciprocal tariff rates that Trump trotted out a few months ago, you know, those are going to raise costs for American consumers. They're going to hurt those countries even worse. So we will see some more global disruption of the economy. The quicker we can move to a settled, permanent, hopefully zero, but as low as possible tariff rate, the more economic growth we're going to see here domestically.
Also, very important to discuss the other ways to reinvigorate American manufacturing, as you've pointed out before. And that is not just through, you know, the zero tariffs as you're talking about, but also through energy production, tax certainty, deregulation. Those are three main, obviously, areas where we could certainly generate more American manufacturing. So let's talk about this for a minute, starting with energy production. Talk about the importance of how this, in turn, helps not only generate more jobs, but also lowers inflation.
Yeah, energy is one of the largest input costs for a manufacturer. So if you look at traditional manufacturing, steel, automobiles, concrete, chemicals, that's one of the largest line items for them as they are operating their company. So driving down those costs, enormous, gives them the opportunity to produce more, to hire more. And then as we look to more cutting edge technology companies, you know, you talk about the growth of AI. AI is very energy intensive. It requires a lot of electricity. And in fact, some of our largest electricity consumers are big tech companies like Facebook and Amazon and Google. They're using a ton of electricity. So the more we lower those costs, the more we're going to have a better economic performance.
Yeah, and when it comes to tax certainty, the president fulfilled that promise to Americans. So how will the One Big Beautiful Bill help businesses now?
It's enormous. You know, having that permanence in terms of the low tax rates, having incentives to invest in the United States. Right now, we were operating on an unlevel playing field. China was subsidizing research and development. We were penalizing it. This bill fixes it, and that's going to really help us create jobs and create new cutting-edge technologies here in the United States.
And finally, very quickly, with deregulation, why is this so important when it comes to building an economy and really innovation?
Yeah, I mean, you can't have a 10-year review process before you build a factory. That's nonsense. We need to have a regulatory process that makes sense, that's cost-effective, and that doesn't hinder critical infrastructure and manufacturing projects.
Executive Vice President of the National Taxpayers Union, Brandon Arnold. Always great to see you, sir. Hope you have a great weekend. Thanks for joining us.
Thanks, Jen.
Data from the U.S. Treasury estimates President Trump's tariffs have generated around $100 billion so far this year, with much more estimated to come in. Let's go to Emma Withrow from the Fact Check team to discuss. So when you hear that number, that's obviously a hefty sum, but it will come with a price?
Potentially. So experts have been warning the price will most likely be passed on to the American consumers. We've heard that many times, unless importers or businesses just decide to eat the tariffs cost and lose money themselves. But according to June's producer price index report, producer prices actually didn't go up in June, which also kind of signals that the U.S. is so far avoiding collateral damage that we kind of were expecting to see from these tariffs.
So Morgan Stanley is saying that these tariffs could bring in $2.7 trillion over the next 10 years.
Yeah.
The Congressional Budget Office is saying they could cut the deficit by $2.8 trillion, but also slow the economy. So clearly there are different takes. Elaborate on why.
Definitely. It's kind of like looking at two sides of the same coin. So Morgan Stanley's talking about how much money the government might collect, and then the CBO is looking at the bigger picture here, saying, yes, tariffs do bring in cash, but they can also slow growth, push up prices, and cut into household spending. The CBO estimates the economy could be about 0.6% smaller over the next decade because of tariffs.
All right, it's kind of like a balancing act.
Yeah.
Emma, thank you so much.
You.
Later on, Emma will join us to break down the potential impact these tariffs could have on interest rates and consumers years down the road. Federal Reserve Chair Jerome Powell has essentially said tariffs are a reason he isn't cutting rates yet. But is that justified when producer prices didn't go up in June? Let's go to Emma Withrow from the Fact Check team to discuss. So I know you dug into the latest data today. What did you find?
Yeah, so like you said, June's producer price index, it did cool to 2.3%. year over year, but the Fed's preferred way to track inflation is really the personal consumption expenditures. So Powell's been saying tariffs for passing the price to consumers might take just a little bit longer. So until the Fed can really get a better feel for the impact of these tariffs, it sounds like rates are going to kind of stay on hold.
Yeah, a different school of thought. You've got, you know, on the one hand, some really urgent about this must be done now, and him saying it's kind of a waiting game. So are tariffs actually cooling the economy, or does the data suggest otherwise?
Well, it kind of depends on who you ask, but just looking at the current situation, I mean, short-term growth in markets have really held up, but forecasters at the same time are saying that the impact of tariffs is coming. The CBO projects that our GDP is going to be 0.6% lower in 10 years directly due to those tariffs.
So bottom line for deficits, growth, and consumers.
Yeah, so bottom line here, deficits, tariffs might cut the deficit by $2.8 trillion over the next 10 years, but also financial experts are saying that it's really just going to be a tax on imports, and we're all going to feel that when we get into the checkout line. As far as growth goes, it's a slow burn, but the CBO projects slightly weaker growth over time, so keep that in mind. And then as far as inflation and rates go, prices are down for now, but the Fed's waiting to make sure that tariffs don't kick prices back up, and they're waiting on holding, lowering those rates until they see, I guess, a better estimate on where we're going to be at in a few months. Those
tariffs, something that we know that we are watching here.
Yeah.
Emma, thank you. For more on this Fact Check team topic, including links to their sources, scan the QR code or visit thenationaldesk.com.